Hello everyone, welcome back to our weekly market analysis video with me, Frankie, your market analyst at Markets4U. In today's video, we'll be looking at the key economic events and data releases from June 2nd to June 6th, 2025. I've already set up my screen to display the economic calendar from the traders room at Markets4U. I've set the dates from June 2nd to June 6th, covering this week's important events in GMT. Please remember to adjust to your respective time zones. Let's dive into this week's events. Monday starts with Swiss retail sales and GDP data, followed by US ISM manufacturing PMI, which could provide early direction for the markets. Tuesday brings RBA meeting minutes, Swiss inflation figures, Eurozone inflation and unemployment data, and US factory orders and JOLTS job openings. Wednesday features Australian GDP data, US ADP employment change, the Bank of Canada interest rate decision, and US ISM services PMI. Thursday is packed with high-impact events including Australian trade balance, Swiss unemployment rate, Eurozone PPI figures, the ECB interest rate decision and press conference, US initial jobless claims, Canadian trade balance, and Japanese household spending data. Friday concludes with Eurozone retail sales and the all-important US non-farm payrolls report, along with Canadian employment figures. This week's key market-moving events will be the US non-farm payrolls on Friday, which historically generates 74.42 pips volatility, and the ECB interest rate decision on Thursday, where the central bank is expected to cut rates to 2.15% from 2.4%. These releases should create significant opportunities across major pairs. Now, let's go to the technical analysis. This week, we'll focus on the euro against the US dollar and the US dollar against the Canadian dollar, as both instruments face their most significant data releases of the month. Let's start with the euro against the US dollar. Looking at the daily chart, the euro-dollar pair is currently trading around 1.1247, showing strong bullish momentum after breaking above key resistance levels. The pair faces a crucial ECB interest rate decision and ECB press conference on Thursday, which historically generates substantial volatility. Looking at important levels, the euro against the dollar has support at 1.1225 and 1.1089, while resistance can be found at 1.1423 and 1.1543. The price is currently trading above the 20-day moving average, the red line, which is acting as dynamic support. The stochastic oscillator is showing potential for continued upside momentum. The ECB is expected to cut rates by 25 basis points to 2.15% from the current 2.4%, marking another step in the easing cycle. The market reaction will likely depend on the accompanying statement and guidance for future policy direction. Additional volatility could come from Tuesday's Eurozone inflation data, Wednesday's US ADP employment change, and Friday's US non-farm payrolls, making this an exceptionally active week for this pair. Now, let's turn to the US dollar against the Canadian dollar. On the daily chart, the dollar-Canadian pair is currently trading around 1.3736, showing signs of consolidation after a significant decline from earlier highs. The pair faces multiple high-impact events this week, with the Bank of Canada interest rate decision on Wednesday and Friday's Canadian employment figures. Looking at important levels, the US dollar against the Canadian dollar has support at 1.3613 and 1.3431, while resistance stands at 1.3890 and 1.4085. The price is currently trading below the 20-day moving average, the red line, which is acting as dynamic resistance. The stochastic oscillator is trying to cross back lower, suggesting potential for continued downward movement. The Bank of Canada is expected to maintain rates at 2.75%, but any hints about future policy direction will be closely watched. Canadian trade balance data on Thursday could add more volatility. Canadian employment is expected to show modest growth of 5,000 new jobs in May, down significantly from the previous 7,400. The unemployment rate is forecast to rise to 7% from 6.9%, which could influence Bank of Canada policy expectations and put further pressure on the Canadian dollar. Both instruments could see considerable volatility this week. Traders should be particularly cautious during Wednesday's Bank of Canada and Thursday's ECB decision, Friday's US NFP report, and the various Canadian data releases, as these events can cause sudden spikes in volatility and potential gap risks. Remember, always manage your risk carefully and never invest more than you can afford to lose. That's it for this week's analysis. See you in the next video.